Okay, good afternoon, folks. Good morning, good evening, of course, depending on, where you are in the world. Hopefully, you're having a fine week. A lot of trend reversals going on in the markets I see today, so lots to talk about today. If you're tuning in here for the first time, let me introduce myself. My name is Andrew Lockwood. I've been a professional trader now since I left school, which you can tell is quite a long time ago. Many years ago. I started off in the trading pits in the city of London. You'll see my jackets there on the wall behind me. Those are my trading jackets. That was open outcry, shouting, screaming, what have you. We basically saw that close down at the turn of the century. Mr. Around in Singapore, trading over there for a couple of years. Back here on the screens, 2005, been trading ever since. And I now trade for a living, but I also run a trading school over at forexsignals.com. I'm delighted to be asked by Eightcap to be their guest analyst for the month of May, so really enjoying it so far. But my idea for these sessions is not just to go through the charts and tell you what's going up and what's going down, because ultimately no one really knows what's going up and what's going down, but it's maybe to share a little bit about an insight into how I think you should be looking at the markets and how professional traders look at the markets on a daily basis. Of course, we'll go through the charts and real-time events as well. And I'll also talk to you a little bit about a strategy that I use to tackle the markets. If you are new to trading, obviously people at different levels of experience, I don't want to sort of insult your intelligence, but if you are new to trading, you do need to have a strategy. Strategy is basically a set of trading rules that you know has an edge over time. Those that fail in the markets generally fail because they don't have strategy and they are basically unhinged in their trading, basically random trading. That's ultimately leads to all sorts of problems, not only for the P&L account, but also for the emotions as well. So I try to get a little bit across that in my short time with you today. Now, this is on GoToWebinar. Please do leave any questions that you may have. I'll try to address them as I go. If not, we'll have a look at them at the end. So please do get engaged. If you want me to look at anything in particular, whatever it is, whatever trading entity, if it's got candles, if it's moving up and down, I'll have a go. I can trade it, I can analyze it. So do please get involved should you wish to. Okay, and I've got to make sure I can see the chat. So let me just click on that. And there we go. Right, and my producer is listening in. If he can also send me some questions, if I miss them as well, I'll see that directly on my screen. So Rob, if you can do that, if you see some questions that I need to address. Okay, so let me first start off about why I trade the Forex markets. The Forex market is my premium trading entity these days. Used to be in the trading pits, of course, different environment. Came onto the screens 2005, lost quite a lot of money 2005, 2006, if truth be told. I was random trading. I actually developed this trading indicator back in around end of 2006, 2007, when EA's economic indicators automation was all very, very new. Cost me a lot of money to have this traded up all those years ago. Getting done for pretty much next to nothing these days. But this basically is why I am trading the Forex market. It basically gives me my edge in the markets, and trading is all about having an edge. If you want to take a view on Apple stock or Amazon stock or whatever it is, you know, that's a one-dimensional market. It's going up or it's going down. It might get dragged along by the different sectors, but it's basically one-dimensional. Forex market is two-dimensional. There's two economies going on. There's two different currencies at play in one transaction. You've got one currency pitched against the other. So whenever you're buying one currency, you're basically selling another currency. And what I use this indicator for, because it tells me what currencies are currently being bought and what currencies are currently being sold. What's strong, what's weak. Yeah, I'm a trend follower. I want to buy the strong currencies. I want to sell the weak currencies. And this is basically why I use this indicator. Basically, it tells me anything above the line that's moving that way, it means that the currency is getting stronger, and anything moving down is a currency getting weaker. So this is my sort of, I hate to use this word in this business, but this is my holy grail, if there's such a thing. It basically gives me that edge. Everything I do is based around that. And you can see here, we've had quite a busy week in the terms of the Forex markets. Last week, we had a lot of central bank rate decisions. Now, any of you that follow the financial markets, well, let's put it like this. Anyone that goes shopping on a weekend in the supermarkets will know what's happening in the economy. Prices are going up massively across the globe. We've got data out this afternoon in the US, for example, CPI, Consumer Price Index. The estimations for that is 8.1%. Prices are 8% higher than they were last year. You know that if you go shopping recently, and certainly if you go to fill up your car with petrol, you know all about price inflation on fuel. So basically, we had a lot of central banks last week, obviously making their rate decisions. Now, as a currency trader, we're always looking at what the central bankers are doing, what interest rates are doing, because the theory is currencies should follow where interest rates are going. Yeah, or interest rates go, currencies should follow. Well, it stands to reason why that happens, of course. If you've got a bond, which is basically an IOU from the government, and they're offering 3% like they are in the US at the moment, 10% yield, 10-year yields are offering around 3%. If you want to get into that yield, if you want to capitalize on that, put some investment away for 10 years, you might be doing that yourself, but certainly hedge funds and pension funds are doing that with their massive amounts of capital. Well, if they want to invest in the 10-year bond in the US, well, they've got to buy the US dollar, haven't they, to invest in those bonds. So we're always looking at the bond markets. And if you look at bond markets recently, they have been absolutely flying. And last week we had some rate decisions out of the US. Now, the US moved their interest rates by 50 basis points. Markets have pretty much priced that in to the currency. And when they announced 50 basis point rise, the untrained trader, untrained eye would say, "Oh, interest rates up 0.5%. Let's buy the dollar." Well, unfortunately, it wasn't quite like that, because markets were expecting that dollar rise and that increase. And in fact, some analysts and traders were looking at 0.75 or 1 basis point rise, 1 point basis rise. So actually, the dollar came lower. But now the dollar has regained its power up there. We also saw a rate rise in the UK. The UK sterling was running into the rate hike on Thursday with expectations of a hike. But once they did hike, and you can see it here on the momentum meter if you follow my mouse here, this is basically when they hiked. The pound actually came lower because, again, the Bank of England followed that up with quite a negative outlook for the state of the economy. I don't think they mentioned the actual word, but if you've got inflation going like that and you've got growth going like that, that basically leads to potentially stagflation. And stagflation is a good indicator of an impending recession. So sterling basically came off, as you can see that, because the Bank of England, this white line here is the pound, came off on the back of it. Pound is now regaining some strength. We also had a rate rise out of Australia. So put all that into one basket. You've got the Fed, the US moving interest rates, Canada have started moving their interest rates, and New Zealand have moved their interest rates, UK have moved their interest rates, and we've got the Bank of England moving interest rates as well. And in fact, you can see that quite clearly if I go to here. This is basically the 10-year bond markets. Okay, so you can see all these interest rates edging up at the moment. What I want to sort of focus on a little bit today is what's happening in the euro. Okay, so the euro, which is this blue line down here, or so I beg your pardon, it's the pink line, it's the DE, which is basically the German government bond. The yields in the German government bond were pretty much negative all last year. In fact, below where the silver line is, the Japanese yen. But certainly over the last few weeks, we've seen a rise in the European yields, and that's basically pushing up the euro. But it's lagging behind all these others. All these have basically started to move their interest rates. Look, everything was moving up and the euro was flat. Now the euro is playing catch up. But interestingly enough, the euro against the US dollar, it's on 6-year lows, isn't it? Well, why is it on 6-year lows? Well, it's on 6-year lows because the dollar, the US dollar, is the most strongest currency. And you know the most actively traded currency pair on the planet is the dollar against the euro. So if the dollar goes up, the euro's got to go down or come under pressure. But the euro is gaining some strength at the moment. And I think you're seeing that, as I say, on my old faithful momentum meter here. You know, this blue line here is the euro. Okay, so this is the euro. You'd expect to see the euro down here with a strong US dollar, but it's not. So if you're pitching now, looking for strength, is it time maybe that the euro starts to play catch up? Is it time now to think, hang on, all these other central banks have started to move their interest rates. The euro hasn't actually moved its interest rates at the moment. Japanese yen, of course, hasn't. That's why it's flat down there at 0.25%. But is it time now for the euro to play catch up? Very, very possibly. And I think you're seeing that in some of the currency pairs. We were talking about it yesterday inside our trading room. It's in fact one of our trade ideas that we're looking at here. This is the euro against the Australian dollar. It's been moving up, moved into a bit of a red at the moment, but it's been a nice little uptrend in here at the moment. We never want to get into trades at the top of trend. We never want to get into trades at the bottom of trend. We always want to wait for the pullback. This is not a bad little pullback coming in here at the moment. The euro is having a pullback in what is a strong currency, and Australian dollar is a weak currency. So the euro odds is something that we are looking at, or I'm looking at potential for a long trade. So we are playing that at the moment. But the euro against all these currencies, look, this is the euro against the New Zealand on the daily time frame chart. Euro New Zealand, it's been on a big power move up. But the euro dollar is on its knees. This is because the euro is playing catch up. And this is why there is some sort of strength coming into the euro. So buying euro strength against selling weaker currencies potentially has the edge. So this is how I use this momentum indicator. I look at these currencies that are heading lower, generally weaker currencies, and I look for the currencies that are heading higher, for the higher currencies, and then gives me an edge. Remember, trading is all about having that edge. You know, we have winning trades, we have losing trades. The idea is to have more winners than losers, and for the winners to be bigger than the losers. Well, you need an edge for that, and that's why, you know, we are always looking for that. And this gives us. It doesn't predict the future, unfortunately. If it were, I wouldn't be talking to you about it now. I literally would be on my yacht in the Mediterranean, just playing lists. But unfortunately, it's not as simple as that. So this is the sort of the edge that we're looking at the moment. Buying these stronger currencies, the US dollar, the euro. Let me just show you the DXY. Actually, the DXY is the, that's not that one, isn't it? It's this one here. So this is the dollar index. For those of you that don't know what this is, it's basically the dollar pitched against 6 major currencies. Okay, this is on the daily chart. Always like to do multi-time frame analysis when I'm analyzing the markets. Okay, this is on the daily. You know, we're not far off the highs there, but we've got to go out now to the weekly to see the last time we were up here. The last time we were up here, as I said, last time we were up here in the basket, we are now was basically back in 2016. 2016, what was that, 6 years ago? So the dollar is now the strongest it's been for the last 6 years. I don't want to stand in the way of that. Yeah? Still looking at dollar strength, and there's no real fundamental reason why the dollar should pull back. Now, of course, you're going to play catch up with the other currencies. Maybe trading the dollar on its own is not the best currency. Trading, you know, an edge, maybe buying the euro as well. Look at that. That means the euro, remember that the dollar index, it's 58%, I think, of the last time I looked, is made out of the euro. But the euro is still the highest on the pack. So the euro basically has got some catch up to do. So maybe looking at, again, euro strength against other stronger, weaker currencies. And the commodity currencies are weak at the moment. Okay, so as I said to you, I want to also talk about strategy. As I say, we always need to have a trading strategy when we are addressing the markets. And a lot of traders, and I'm sure some of you have experienced this yourselves, you know, when you come into the markets for the first time, you really don't know which way to go. There's educators all over the place popping up with their sort of holy grails, if you like, telling you about this magic strategy. I can tell you this now. There is no magic strategy. There's no magic strategy out there that you can plug and play and go and sit on the beach. It doesn't exist. Every strategy has its pull down, its drawdown periods, and its winning periods. It's just the way it goes. Every trend following strategy that you see out there for sale for $99 or $10,000, every trend following strategy pretty much will make money if the markets are trending. You know, but the point is, you need a strategy, and this is one of the strategies I use, and I want to sort of showcase this to you today, because literally you can go away and start trading this right after this session. It's just basically a trend following strategy. Now, I've talked about it a little bit on my YouTube channel, which if you don't subscribe to, you should do. 335,000 others do, so why not? For Signals TV, I think that is, or just you put my name in YouTube, Andrew Lockwood, and you'll find it. So I talk about this strategy a little bit in here as well. It's basically a trend following strategy. We never want to be buying trends at the tops of candles. We never want to be buying or selling trends at the bottom of candles. Let me just oops daisy, let me just pull my drawing tool over there. If this is going to work. Is my drawing tool going to work on GoToWebinar? Mostly it doesn't work, does it? Let's have a look here. So yeah, okay, that's fine. So you never want to be basically buying candles at the top. You never want to be selling candles at the bottom. We always want to have a pullback. Yeah. So market here is trending up. You see it's trending up, and then you see this type of move. We don't know if that is going to be a pullback, in which case the trend is going to continue, or is it going to end up as a reversal? We don't know that. So I use basic price action to give me a clue, an edge in a market that's trending, which you have the momentum meter for. Does it give me a clue whether it's going to be a pullback or whether it's a reversal? So I use price action for that, and I use this in conjunction with some basic support and resistance as well, or you can do it back into some moving averages. But basically, this little pullback you see at the moment, that's going to be depicted by a red candle. Yeah, this is going to be a if you, well, I haven't got the red here, but this will be a red candle. Some of you use filled in candles and then clear candles, empty candles. That's the pullback. If you see that pullback followed by a pattern like that, where the last candle fully engulfs the previous candle, that is a clue that that is going to be just a pullback. So my trade is going to be to continue trading once we get above there. My stops are going to be potentially below there. You might just use an ATR stop. 2 ATR stop is quite a good way to keep disciplined. 2 ATR stop, 3 ATR profit target, decent way to get a risk reward, and away you go. It's a clue. It doesn't mean it's going to happen. It means it's a potential. And we've also have the same type of thing on a pin bar, for example. So you may have this movement. You have the sellers in control. I beg your pardon, it's the other way around, isn't it? So you'll have the market's moving like this on an uptrend. Yeah, then you have this pullback. Is it a pullback or is it a reversal? I don't know. It's going to be depicted by a sell-off. When the sellers are overpowered by the buyers, we're going to see a candle ending up like that. That basically means it is likely to be just a pullback and the trend is going to continue. So that's basically an uptrend. I'm not going to go into all of them because we have got limited time here today. But that's a strategy you can basically go away and test straight away. In fact, if you watched my YouTube video last week, we used these in a reversal strategy. But today, to make my life easier, and what we do here basically is to look at, well, I basically use this tool, which is part of our tools here at Forex Signals, but it's a basic pattern finder tool. It's not magic. You can get them on TradingView. I don't think you even have to pay for them on TradingView. I don't know if you have to, whether they send notifications. I'm sure they do, but they are out there. I'm not here just to peddle my trading tool. You can find these all over the place, but it basically tells me, it helps my life go a little bit easier, showing me where these engulfing patterns and pin bars. And what I do as a day trader when I'm actively in front of the day screens is basically looking for these setups in a trendy market where I've got strength over weakness on the momentum meter. Very simple, and just looking for these pullbacks. Let's have a look here. For example, we've got New Zealand against the CAD here. I just click on that. Okay, so New Zealand CAD, well, this is potentially a little setup here on the lower time frame charts. This is a 15-minute chart. We had this pullback. Okay, is this the pullback? Is it a reversal coming back down here? Well, then we had this engulfing pattern. So the entry of this would be above this entry. We didn't actually get above, so you wouldn't be in the trade. You're going to have maybe a stop below the signal, and profit targets. Basically, a 3 ATR profit target would well be worth testing out. 2 ATR stop, 3 ATR profit target. But I need to also look at the higher time frame chart, which we'll look at there. But what's the higher time frame chart show me, folks? I mean, you can, maybe if you drop in the chat there, you can drop me what you're seeing there. Higher time frame charts. I'll tell you what they're showing me. Higher time frame charts, the trend's down. I want to go with a bigger trend, so I'm not going to be taking the New Zealand against the CAD for a long trade. Okay, so I'm just not going to take it. We're bred to believe in this world that the more work you put in, you know, the more money you should get paid. Trading doesn't work like that. Often the less work you put in, the more money you should get paid. Only taking the high probability trade setups. I don't go down to the 5-minute chart these days, but this is a webinar, so I thought I'd try and get a bit of action for you. So we'll see if we can see some trade setups just on this very, very mechanical setup. Look at the CAD yen. The CAD yen, you're seeing a bearish pattern here. So pull back into the moving averages, it puts in this bearish. This shows you, but this is most probably not a bad little trade. It's the 5-minute chart. Let's have a look at the higher time frame chart. Okay, it is a downtrend. The bias is with us. Okay, if you are inclined, that is the 1-hour chart, the 30-minute chart, and the 15-minute chart. 15-minute chart, I mean, that's not a bad little setup, folks. Quite frankly, you can take, I mean, the only issue with that for me would potentially be profit targets around 99.80. So 99.80, which is this zone here, is most probably going to act as a bit of a resistance, support zone. You know, and look at the predominant trend on the daily. So again, you know, I'm not a big fan of trading the 5 minutes these days. I mean, if you're looking at the 5-minute, then you might want to just look at the hourly for the trend direction. But for me, you know, I like to see the bigger trend really on the higher time frame charts. 5-minute chart, okay, not the best one, is it really? It's in the middle of this sort of type of range. If I'm trading, I want to trade if it's my only trade of the week, and that one wouldn't be it. You know, wouldn't be it for me. So I'm going to leave that one. But you're getting an idea, so hopefully, of what I'm sort of looking at. Let's have a look. Anything else on the higher time frame charts here? This is the pound CAD. It's an hourly chart. It's a while ago. Well, you ain't going to be trading that little puppy. You know, look at the trend on this. It's not moving anywhere. You know, it's pulled back in. You saw, you know, we could have had a reversal, but you know, too much noise there. I want to see nice fanned out moving averages, not these moving averages that are all bunched up in the middle. You know, you want to see good fanned out moving averages looking something like that for the big trend again. So I'm not going to be taking that one. Oops, daisy. I should be closing that down. Anything else here that might be interest? Pound against the Swiss. What's going on, pound Swiss? Oh, look at this pound Swiss. Pound Swiss 15-minute chart. Have a quick look at the higher time frame, the hourly, and then the 4-hour. It's just too rangy. Just too rangy, guys. I mean, you know, I'm sorry, I know you come on here maybe looking for some trade setups, but on this trend following, there's not a lot going on. As I said to you at the beginning of the at the beginning of the webinar, you know, we're breaking into some, you know, some reversals, which basically mean all the lovely trends that we've been saying, buying the dollar and selling the yen, that seems to be reversing a little bit at the moment, which for trend followers, you know, all trend following strategies make money when the markets are trending. Maybe we're breaking into consolidation now. Quite often the case when you have such a busy week of central banks and then non-farm payroll at the end of the week, you quite often see consolidation in the forex markets. So normally it's the week where I don't actually get actively too involved, but we'll see. We'll see what's going on. We've got another maybe 5 minutes to see if anything comes up. We'll see in about 20 seconds if there's any more setups coming up. And of course, you can have this on the 4-hour as well. We have a strategy that I teach on the daily charts. It's basically it's a reversal using these same simple price action patterns, but on the higher time frame charts. So let's have a look here. We've got about 15 seconds to see if the next 5-minute candle is going to show up anything, and then we'll have a quick scan of what is going on in the other entities such as stocks and Bitcoin and the like to round us off. Okay, we've got no setups on the last 5-minute candle. Okay, so nothing. Oh, have we got anything coming up there? No, nothing coming up there. Just the look at this dollar against the yen. Okay, unfortunately, I clicked I think too many times there. We just waiting for the screen to catch up. Just hanging here a bit while it's catching up. I've got so many things going for this webinar today. Okay, well, we'll leave that then. But that's just a basic little strategy that I think you can go away and trade with. And I think, you know, the biggest issue for traders is that A, they don't have a strategy, and B, that they can't follow a strategy if they do have a strategy. So there's your first step. Go and put some work in and look at those strategies that I've just outlined. But keep them very, very, very simple. It's all about simplicity in trading. I've seen so many traders just kill their trading accounts because it's so blooming complicated. Right, okay, so let's have a quick look. We looked at the DAX. I just want to show you one of the reasons again why the why the dollar is so strong. This is the 10-year government bond. Look, it's almost the same picture as the DAX. Okay? So if you're looking for clues where the dollar is going, keep an eye on the 10-year government bond. Look at the yield there, just shy of now 3%, been building all the way up from 0.4%, which was, you know, well, I think the move really started when we, you know, about sort of October of last year, where we were basically about 1.3, now up to 3%. Obviously, the war and so forth. So it's basically following us up. Stock markets have been quite volatile. We've had this pullback in the. This is the Dow. You know, I am a long-term holder of US stocks. I have a whole bunch in certain funds. Cost me quite a lot of money over the last, last 2 or 3 months. I've must be had quite a painful 3 months in terms of my longer-term holdings. But what funds haven't? You know, the stock markets have basically dropped from their highs of. You know, we've dropped, you know, almost 11% in the Dow from their highs of last year. So it's the weekly. So we're seeing this is back to the daily. So the daily now is basically showing us, I think, a level of significance. Where do we go from here? I think if you look at the higher time frame trend, of course, higher time frame trend is up. We are respecting this level here at 32,400. Bounced off it 3 or 4 times now. We're looking at it again. You know, if we see a break and close of this over the next couple of trading sessions, then I think the market is going to be looking at an attempt to get back down to 30,000. It's going to get some nervous traders, and I am not, you know, I might be experienced in years, but I myself look at that and thinking, gosh, you know, could this go down another 20% over the next couple of years with global economies slowing down and inflation ripping around? You know, even I'm thinking, you know, should I maybe shift out of some stocks in my longer term funds? Longer term analysts will tell you don't. It's just a natural progression of the market, but sometimes it's difficult, certainly when you see you've dropped X of hundreds of thousands on the account. You know, you sort of like tend to go into protection mode. But ultimately, you know, all the pullbacks we've seen pretty much since the turn of the last century, you know, it's always, you know, the longest I think was the 2008 recession. Took us 5 years to get back, but we got back to new time highs. We had the same in 1990. We always make new equity highs. Ultimately, you know, stocks are bought. Ultimately, stocks is where you and I go to work. Well, I don't go to work, but ultimately, you know, you go to work in companies to make them profitable. Ultimately, it's you know, it's got a you know, that underlying bullish current. Anyway, I do think though, if we break below 3,200 today, we could see a possible move back down to the 30,000. That's the we'll look at the S&P 500. Okay, S&P 500 on the daily as well. We have broken through what I had drawn in as a sort of a level of concern. We broke through there at 4.2. Now up to 400 again. We could be looking at a move down to 3,500 if indeed we have sustained closes below this level. Then you can look at, you know, the 4,200 to the upside as being the resistance zone. Bitcoin's under a bit of pressure, isn't it? For those of you who've been following your old Bitcoin, I do buy Bitcoin every month, the 15th of every month. So I'll be buying some on the end, well, on the weekend. Every month I chuck a little small amount of cash into my Bitcoin. I just buy it here on the on my digital hard drive storage. I just average in. My argument there is I have daughters that my youngest daughter is 12 years old. I know when she's at university, she will be talking about Bitcoin, and if she is talking about Bitcoin, that could pay for her school fees. it ain't going away. So I just average in. I don't really care about it, looking at it and in terms of investment. But of course, if you are trading, you know, these Bitcoins and so forth, well, obviously, you know, the guests for me today, Eightcap, wow, boy, what a place to be. You have, I think it's 250 altcoins that you can trade over the, you know, literally now 24/7. Okay, so you've seen here on the, where we go? Let me just go to my my symbols. You've got, where are we? Let's just put it up. This is stalling as well. There we go. So if you go over to all these different cryptos you can trade, I mean, there's literally medium caps. There's all these that you can trade, you know, and these are all, you've got all the high caps. You've got the Bitcoins and the Ethereums. You've got Dogecoin. You've got Cardano. You know, you can literally, you know, trade this all weekend. At the end of the day, the chart's a chart. If you're in and out on a 15-minute chart, you know, trading strategies, being disciplined, you know, and this is just getting, you know, and you've got the crypto indices as well. It's a great place here on Eightcap to start expanding your trading. You know, some of you I know have jobs where you can't maybe put too much attention during the working week when you get home from work, and the markets have gone into, you know, into consolidation because they've gone to sleep, or there's just no volume. You know, you can be doing this on a Sunday and Saturday. I don't suggest you do that just for the sake of gambling. Make sure you have a plan and strategy. But you know, lots going on there. But Bitcoin is under pressure at the moment, as I say. So maybe we'll see a continuation of that. Bitcoin, 29,500. It's only 500 points away from here. $5,000 away from here. I say that flippantly. $5,000 in Bitcoin isn't not very much, is it really? You move there, pretty. $5,000. What would that be from here? $5,000 would take us down another 15%. That's the daily move for Bitcoin, isn't it? Right, folks, so that's a quick sort of overview of how I analyze the markets. As I said, I do stream live around the clock at Forex Signal, teaching our strategies, looking for trading opportunities, and so forth. If you want to pop over and have a look, you can do so. I think we've got 50% discount for you guys as well. If you ever want to play with this momentum meter, you can do so as well. Look, folks, have you got any chats here? Let's have a look here. We've got anyone reaching out on the chat. I can't really open a chat for some reason. I'll have to sort that out for next time. Of which next time, by the way, I will be addressing you next Wednesday from the other side of the world. I'm going over to my villa in Thailand, so I'll be doing that this webinar from there as well. Traders never sleep, as they say. It'll be 3 in the afternoon for me there. Hopefully the sun is shining, but we'll see. I will try and put on some business attire off the sunbed, but I'll be there next week looking at the markets with you. So please do come along and join me then. I hope you found it useful. Hopefully maybe you learned something as well. Didn't take any trades today, but you've got a bit of a bias there at the moment. The euro is still quite strong. If you can pick a euro against another weaker currency on a nice pullback in a trend, maybe you've got an edge there for yourselves. Okay, folks, thanks for tuning in, and I'll see you next week. Have a good week.